Welcome back. Pashupati Advani is now with us from Global Foray. Pashupati, good to have you with us here. Thanks for your time. Let's just start with the brief bit on the market itself, Pashupati, because lots of heated debate and discussion about whether, we are at a point where one is, of course, we're thoda thanda today, that's it, and maybe the market picks right back up when we return day after. But generally, for the last many weeks, lots of serious long-term investors, Pankaj Tibrewal, for example, was with us yesterday, been making the point that maybe, it's kind of too hot to handle, and you need a cooling off period. So just wanted your thoughts there, Pashupati. Add to that maybe in the next 24 hours, we'll have the SEBI rules on F&O curbs, which perhaps more than anything else, what it does is reduces market volumes, as a lot of exchanges are fearing. So just wanted your thoughts.
So one thing is very clear. If you hadn't noticed, there's an election in the US in November. And I think
I thought you were talking about our election next week. This week, sorry.
This week.
Which is state election, sorry.
No, so the big election, the Americans have always had this phobia of $3 gas at the pumps. So, definitely I don't see crude going up before the elections. So that is good for India, and I hope our oil companies and oil marketing companies are taking advantage of it to buy cheap crude, because if global crude is 70, imagine how cheap Russian crude will be. And I think that arbitrage is gone. But the answer is, please buy 9X and Brent crude as much as possible, so that, because we are still a huge importer. That's, first of all, that's very good for our balance of payments. Second of all, we've also got this thing of on the flip side, exports, where exports are not doing as well. The IT thing, according to me, is slowing down. We are not going to be able to pivot as fast as AI is pivoting for us. So, our IT companies are basically going to lose some market share. And also with the issue with the visas and, difficulties in making people travel, I think that's also going to hurt that sector. So those two, the oil sector and the IT sector, are big sectors. The other sectors that are big, obviously, are the banks, the banking sector. In that, the private banks seem to be doing okay. The state-run banks are having some pressures, because I think that there's some pressure to, take some more loan loss, etc. And but hopefully, with rates coming down, their bond portfolios will go up, so they'll net be okay. But I think that the market therefore is worried. Plus, as you said, we're going to get some laws about SEBI and how they're going to restrict the number of players in futures. I mean, the reality is that retail has lost supposedly about $100 billion, and a lot of that has been taken out by FIIs. So basically, we're just giving our foreign exchange, and it's going from retail out. So I think the government wants to stop that. Now, if it means that we have a slight correction in the market, so be it, because I think in the longer term, it's better to not lose the money and have some of the smaller retail not be in this fracas. I mean, we're hearing all sorts of rumors, but let's see what happens. And then, of course, the other challenge is that the SEBI chairman is also under some pressure. So credibility, et cetera, in her case. So whether she's going to make the decision, whether she's going to be replaced, these are all sort of market buzzes. So those are my thoughts. And as a result of which, the market is behaving, I would say, skittishly. And the other big challenge is that Japan looks like it's going to raise rates. The Japan carry trade, which was basically fueling all the liquidity globally, is disappearing really quickly. And that's also putting pressure on asset prices globally. Prashant?
Pashupati, hi, afternoon. You missed out on China to give us your thoughts on the kind of sizzling rally, stimulus fuel sizzling rally that we've seen. Today, of course, shut on account of Golden Week, today onwards. But till yesterday. So where do you stand on that, and how does it change things for India and investing in India?
So a friend of mine who's actually of Chinese extraction, but he's a portfolio manager outside based in Singapore, says that I have not increased my exposure to China. I'm very happy with my 2.5% exposure. He says, I really don't understand what's going on there. And, it is affecting us. But the reality is, when are they going to give us visas to travel? I mean, it's becoming almost impossible to go to China, and it's also equally impossible for them to come here. So I think that we've got other sort of sub-battles going on with China that's actually making us ignore China in a big way and benefit from the fact that money is coming from other countries to us rather than into China. Seema?
Pashupati, hi, Surabhi here. So yeah, there's so much going on, right? Oil is falling, and then China. And by the way, there's a Eurozone inflation number that just played out for the first time in 3 years. Finally, the Eurozone inflation number is, I think, at 1.8%. It's fallen below the ECB's target. So with oil prices cooling off the way they are, I think inflation is no longer that big a concern. So there's a lot, I think, on the international arena, there's just a lot that we're dealing with right now. But that brings us back here home. We've seen a bit of a change in the texture of the market rally, right? Some of it came back to large caps. We started seeing some participation in financials. What would your advice be now till the end of the year, given that we have elections, we have central banks doing all kinds of things, and there's oil? What should the portfolio strategy or the stance be? What would you be doing, and where would you invest new money?
So I actually believe that one should be buying into oil companies on dips simply because I don't think this 65, 70 oil is going to stick around for too long. I think after November 4th, it'll jump up. So the chances, if you get a dip in oil, it's great. And now the oil companies are kind of merged with oil marketing companies. So I think that will also be there. I'm not seeing any lowering of prices at the pumps, which is a little bit disconcerting. And it actually means that that's good for the OMCs, because it means the OMCs are going to keep the money, keep the profit, and enjoy themselves. And so I think that's good. So that's kind of like a no-brainer. The other thing is that government is still pushing out infrastructure spend. So any company that's benefiting from that needs to be there, whether it's the raw material, which is cement and steel, or whether it's the actual infra companies. Those need to be bought, the ones that have businesses. Again, I would say buy on dips, because they're all, quote unquote, in world terminology, really overvalued. But again, this is a market where there's going to be some shifting, and there has been some shifting to FMCG, which has gone quiet. And also, I also like the pharma sector, which I didn't mention when I sent you my notes earlier today.
Hi, Mr. Advani. Good afternoon. Good to see you in. Since the world is in a bit of a tizzy on a flux, let's look inward. And one sector that's underperformed is cement. But as we know, second half of the year is better. You have got the timing right quite a few times in terms of cement. Now you have input costs that are down, prices hopefully move up, and demand as well catches up. And even yesterday and today, you're noticing that most of these cement counters, they're not rallying big time, but they're not falling. Even yesterday, they were in the green. What's your view? What's your approach to the cement space? And which stocks do you like? If you could share a couple of numbers with us.
No, so I think there is two things happening in cement. First of all, the demand is there. Infrastructure demand is there. We're at the end of the monsoons, at least in Western India. And, people are going to get back to business, back to finishing buildings, back to finishing roads. And I'll say this facetiously, back to filling potholes in Bombay. So I think that will happen reasonably quickly. And I think that's going to help the whole sector. I actually think that the sweet spot is mid-cap cement, because there's going to be even more consolidation. There's 4 or 5 players, and the Adani group is the biggest. The Birla group is also in the space. Dalmia Bharat is also there. So all the other players are getting marginalized, and I think will be bought because they're trading cheaper as a multiple compared to those 3 groups. So even if they do stock mergers, that's fine as well. So, I think that's where we're going to go. So the sweet spots are going to be into the second tier cement companies. And I don't know, exactly which. And again, we've got Adani selling down some of his cement stocks, which are going to FIIs. So I think that means that, there is some demand from FIIs for cement. And as a long-term play, you look at India, you look at cement, it's part of the growth story. So why not? So, I'm not particularly concerned. And as you are, Nigel, that it's hanging in there.
Okay. By the way, Orient Cement, the last I checked, was seeing a big move, but it's been beaten down quite a bit. It's back above the 300 rupee levels. There was that sort of, there was a quote-unquote deal stock, but of course no deal has materialized so far. And it sold off from 360, 370 levels all the way down under 300, back above it, 7.5%. And the other one is Policy Bazaar, which is jumping 6.5%. So again, from the recent high was 1970, and the recent low is 1550. So from 1550, it's back at about 1720. So we'll see if this sustains or not. But Nigel, I think you wanted to come in on Orient.
Yeah, not on Orient. Actually, Orient, I mean, risk reward seems to be favorable at around 280. You know, that's what's been happening over the recent past. It goes to 280, 285 and then sees a bit of a bounce. The other one I'm talking about is the structural steel tubes business that has come out just now. APL Apollo Tubes, they have delivered, I think, a double-digit 12% growth in terms of their volumes for the past quarter. You know, so that's quite good, and that's the largest player in the business, so that stock moves up. But the other one is JTL Industries. You know, plenty of promise out there. It's coming on a lower base. It has valuation comfort as well. And that stock has spiked up as well because on that small base, you know, they have grown by close to around 26% odd. So both these two stocks, in the last 30 minutes, both of them have come out with their quarterly sales numbers. And at least for now, both of them are rallying. But JTL has that valuation comfort. We'll have to see whether or not the promoter entity converts those warrants that they took at around 270 rupees. That's the biggest trigger for that particular counter. But we'll thank Mr. Advani for joining in and giving us his take on the markets as well as on a whole host of sectors. For the time being, we slip into that snappy break, come back. Nimesh is waiting for